AMD stock is back in the spotlight. With AI booming, data centers exploding, and AMD's latest chips hitting the market, investors are asking one big question. Is AMD a buy right now, or is it too risky at these levels? In this video, we're diving deep into AMD's latest earnings, financials, product roadmap, AI strategy, and chart technicals to give you a clear 6-month outlook, plus a final verdict on whether to buy, hold, or avoid this stock. Let's go. Let's start with the charts. AMD is trading around $130, and the technical setup looks moderately bullish right now. The 14-day RSI is neutral at around 55, and the MACD is slightly positive, indicating mild upward momentum. Importantly, AMD is trading above its 50, 100, and 200-day moving averages. That's a clear bullish sign. Chart indicators show support around $120 to $126 and resistance at $133 to $140. Fibonacci levels suggest that if AMD can break above $133, it could rally to $145 or higher. That's the 61.8% retracement from its 52-week range. So, from a pure technical standpoint, AMD is coiled and potentially ready for a breakout. Fundamentally, AMD just delivered a strong Q1 2025. Revenue hit $7.44 billion, up 36% year-over-year. Gross margins are near 50%, and non-GAAP EPS was 96 cents, up 55% from last year. Data center revenue surged 57%, led by strong demand for their MI300 accelerators and EPYC CPUs. AMD also posted strong free cash flow of $727 million, with over $6 billion in cash and just over $4 billion in debt. Financially, AMD is healthy, cash-rich, and highly profitable. Now, valuation. AMD trades at a high 95 times trailing PE, which is expensive. But if you believe in their AI and data center growth, the PEG ratio under 1 actually makes the stock reasonable relative to its growth.
Now here's where AMD is really making noise. AI and data centers. The company launched the MI300 GPU platform and now just rolled out the MI350 and MI355 series, claiming 3 to 4 times performance over the MI300. They're positioning this to compete directly with NVIDIA's H100 and upcoming Blackwell chips. In 2026, AMD plans to launch the MI400 alongside a new rack-scale AI system called Helios, combining CPUs, GPUs, and networking into one platform. On the acquisition front, AMD recently bought ZT Systems, which builds AI infrastructure at scale, and also snapped up AI software firms like Silo AI and Untether AI. The vision? Deliver a full-stack AI alternative to NVIDIA's dominance. The challenge? NVIDIA still controls 90% plus of the GPU AI market. So AMD is making progress, but it's still a fight. Let's talk investor sentiment. Institutions are divided. In Q1 2025, more funds reduced their AMD positions than added. But big names like T. Rowe Price and Jane Street were buyers. Wall Street analysts? Mostly bullish. Average 12-month price target, 145 to 150, which is about 10 to 15% upside from current levels. Insiders? They've been mostly selling, including CTO Mark Papermaster, offloading over $7 million in shares. That's something to watch, but not unusual for a high-performing stock. The final verdict? AMD is not cheap, but it's also not done growing. Their AI roadmap is credible, and if the MI350 series gains traction, the upside could be big. But high valuation plus China export risks equals potential short-term volatility. If you already hold AMD, this is a hold. If you're looking to enter, consider buying on dips near the $120 support range. AMD is a high-growth AI stock with long-term potential, but timing your entry will matter. Keep an eye on Q2 earnings, GPU adoption rates, and any regulatory headwinds. AMD is a stock at the center of AI innovation, but also in the crosshairs of global competition and market expectations. If you found this breakdown helpful, hit the like button, subscribe for more deep dive stock analysis, and drop a comment. Are you buying AMD at these levels? Or waiting for a better entry? Thanks for watching. I'll see you in the next one.